All right, welcome to Talkin' Investing. I'm Tom, and as always, this is not financial advice. Today, I'm here to talk about 16 stocks. Yes, 16. I'm going to be quick about it. These stocks all have something in common. They are all in the same industry. They are all related to the EV ecosystem. So that's the electric vehicle ecosystem. I want to go through these stocks because this entire industry has been totally decimated. These stocks are down a shocking amount, and I want to go through what I think that means and are there any opportunities in here. So one of the things I'm going to show you is everything is really already much worse than we think. However, I believe that is good news, so I will explain later. If you're new to the channel, please remember to subscribe and hit the notification bell. We're almost at 10,000 subscribers. I would appreciate any new subscribers. And of course, smash the like button and feel free to leave a comment below. You will see in our pinned comment a link to our free Discord. We just went over 700 members there, so we would love to have you join our conversation there. We talk mostly about small cap, high growth stocks on this channel, the electric vehicle sector, and I am going to be focusing on the small cap EV stocks. And I will tell you, the large cap EV stocks have been decimated as well. Not quite to the extent that the small cap EV stocks are, but in general, we're all looking at a stock market where, the S&P is in a little bit of a bear market. It's down 20%. The NASDAQ and the Russell are more like 30%, so it's worse than that. And everybody's saying, how much worse can it get? But I don't think everybody's measuring this fairly. There are already entire industries that have been wiped out, and there may still be pain left to come, and we may not have hit the bottom yet, but the pain is going to rotate, in my opinion. There are certain sectors that have already felt the pain. That doesn't mean they're at an absolute bottom. Yeah, they could still go lower. I'm going to say the average of what we're about to look at is 90% down. So these companies are going to be multiples bigger 5 and 10 years from now than they are today. Now, there will be some winners and some losers. So if we're looking at 16 stocks, maybe 8 of them are going out of business, but that means the other 8, may double or triple or quadruple or 10x. We don't know. We know that the electric vehicle sector and infrastructure portion of that is being heavily subsidized. Here in the United States, the federal government and the state of California have already committed many tens of billions of dollars to be put into this sector to make sure that it matures. So it's not going away. Whatever you think about electric vehicles and whatever your personal opinions are, this is not going away. That doesn't mean it's going to take over the world and there's never going to be another gas vehicle. It's just this sector is still in the early stages and there is massive growth to come. So having said all that, let's just zip through this list and then you guys can see for yourself. I'm just going to say I think this is 16 stocks worth putting on your watch list. And then, it's up to you guys to go in and figure out if there's some hidden gems in here. I believe there is. Okay, the first one is Arrival, stock ticker ARVL. Now, all of these I'm going to measure off of basically their all-time highs. So for most of these, this was about 18 months ago. There was a bubble around December of 2020 and January of 2021. So things got overheated. So I think we've gone from that January 2021 bubble where everything was overheated to we're now a year and a half later, and I think the pendulum has swung all the way the other way, and these stocks that are going to survive are now wildly undervalued in my opinion. Okay, so if we look at Arrival, they are down 96% in the last year and a half. That is total decimation. Okay, so even if we don't go a year and a half back, if we just go back 6 or 7 months to November of 2021, this stock is still down 90%. So the vast majority of the value of this company has evaporated. Yes, it can still go down, but if you do your due diligence and you think they are going to survive and there's a thriving business somewhere on the other end of this, we're not trying to pick bottoms. We're just looking for buying opportunities. So a stock down 95% that you think is going to succeed in the long term, to me, that's a buying opportunity. Yeah, you might have to dollar cost average in for a little while. These hidden gems are one of the ways you can pull a 5x or a 10x, and these do happen all the time in the stock market. So it's not a pipe dream and it's not a get rich quick scheme either, because you've got to do your due diligence. And the 5 or 10x might take 2 years or 5 years, but it's worth it. So again, I don't know that Arrival is one of these. And again, none of this is financial advice. I'm going to show you these 16 stocks and you guys can try and figure out for yourself. But Arrival is down 96% from its all-time high at a year and a half ago. Okay, Go EV, this is down 92%. And this again is off of its January of 2021 highs. So that's about a year and a half ago. If I go from their recent high on November 29th, it's still down 85% in the last 6 months. So I'm not going to do this for every single of the 16 stocks, but you can see my point. This stock's down 92% from its highs. It's down 85% in the last 6 6 months, these stocks have all been absolutely decimated. And again, maybe this company's not going to make it, in which case it's 92% on the way to 100%. However, if it is going to make it, the upside on this, the potential reward on this is gigantic. Just to put this in perspective, and again, I'm not going to do this for every single stock or this is going to be a 1-hour video. Let's say in 3 years, this stock was able to retrace its steps back to where it was trading just 6 months ago. That's a 585% increase. This is why I'm saying 5X's, 10X's, they happen all the time. However, what I will say is you have to have massive conviction and you have to have patience because trying to time the bottom and pick the bottom, unless you're absolutely lucky, you're going to have to wait for it. But they are out there. Okay, Solo is down 90%. Okay, so far this is the best one. A lot of you guys are going to be familiar with a lot of these stocks. I will tell you, I've done a few Solo videos and one of the big comments I got is, this car stinks. Well, I don't know the answer to that. So, that's something for you guys to figure out. Maybe it does, maybe it doesn't. Maybe this has a niche place in the world and it's going to thrive, or maybe it's going to go out of business. So again, not a recommendation. It's just, here's an EV stock down 90%. Okay, stock ticker FUV, again, almost 91% from their highs in February of 2021. Okay, KNDI down 86%. So this is one of the winners in the group. So far, this is the smallest downturn in a stock that we've looked at. This is down 86%, and this is winning right now. I do believe there's one or two that will beat this before we're done, but our average is way over 90 right now. Okay, Helion, stock ticker HYLN. This stock is down 95%, and that is since August of 2020. So, okay, XL Fleet down over 96%. 96%. This is a company that has twice as much cash as market cap. So think about that. They have almost debt-free, and they have significantly more cash in the bank than the market cap of their company, and their stock is down 96%. This is one I have on my watch list. If these guys succeed, it's going to be a monumental upside to this. This was a $35 stock. I'm saying if it can just get back to $9 or $10 in 2 or 3 or 4 years, that's a potential 6x. Okay, Workhorse, 93.8%, so almost 94%. Now, you got to look into these companies. Each one of these has their own individual story. Workhorse has some big issues they're dealing with. So there's risk in a lot of these stocks. Some of these companies are not going to make it. And I'm not saying whether Workhorse is one of them or not. I'm just saying they have some big risk involved in them. They have a situation that's unique to themselves, and there's a reason they're down 94%. However, Workhorse is in the exact same position. If they could just retrace their steps and get back to where they were trading 1 year ago, that would be over a 600% increase. So maybe that takes 2 years. Maybe that takes 5 years. I think everybody will be okay with a 600% return in 5 years. Again, this company has some big issues, and it all started with losing the contract with the post office. So dig into this company before you invest. Obviously, that's true of all of these. Please do your due diligence. Okay, stock ticker RIDE, Lordstown Motors. They also have a very unique story, so you really need to look into this one. But again, they're down over 94% from their February 2021 highs. So you can see I did not cherry pick these. These are the small cap, high growth EV stocks. And you can see one after the next is down 90 to 95%. Some are down more than 95%. The best stock we've looked at, it was down 86%. Arrow down 92.5%. This is another company that has significantly more cash in the bank than their stock is worth. Romeo, these guys are involved in batteries, so 98.8%. This stock's down almost 99% from its highs a year and a half ago. Okay, these next two are the ones that really baffle me. These are EV charging stations. So this is Volta, and I think this is the worst of all of them. Volta is down 93% from its highs from a year and a half ago. Again, this is an EV charging station. The government is going to be putting so much money into these EV charging stations that I don't see really, to me, you got to do your own due diligence, but these seem like a very good risk-reward equation in my opinion. This one's down 93%. Okay, Blink. All right, here's our new winner. Blink is down 74% from its highs of a year and a half ago. So again, this is an EV charging station. Still down 74%. Beam, this is an EV charging station. This is a very unique company, very different than all the other EV charging stations. They are down 81%. Okay, EVgo, this is another down 75%. So you can see the charging stations are doing a little better than the rest of the entire electric vehicle universe, but they're all still down 75 to 80%. Last one, and this is the biggest one. These last two, I believe, were the ones that are actually over $1 billion. So they're the two biggest that we've looked at. This is ChargePoint, stock ticker CHPT, and this is down 72.5%. So again, the charging stations look like they're down between 70 and 80%. The rest of the entire small cap EV sector looks like it's down between 90 and 95%. So I leave it with you guys. There's 16 stocks. Is there a winner in there? Is there one winner? Because, because if you can find just one of these to get a 5x or a 10x on or more, that's a potential big win. But again, be careful, because the flip side of this is these stocks are all down 80, 90, 95%. So obviously these are high risk stocks. But to me, I think this is an industry that has just been absolutely taken out. I think it's an industry that has a lot of money that will be put into it over the next 10 years. This will be one of the highest growth industries out of all the industries in the market. It's going to be supported by governments all around the world. So I just think there must be, with these 16 stocks in here somewhere, a few of these got to be winners. So that's my guess, not financial advice. So those are my 16 stocks. Take a look, see if you guys can find a winner. Drop a comment below if you think any of these are winners. So if you made it this far, please remember to subscribe to the channel and hit the notification bell and smash the like button. And thanks so much for watching, and we'll see you in the next video.